Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how we can use multi-time frame analysis to enhance your analysis on the time frame you're actually trading. But first, let's start with a risk disclaimer, as usual. I remind you that all examples in these videos should be considered as hypothetical. No trades were actually taken. They are shown for illustration and trading purposes only. Also remind you that there's a risk of loss in trading and investing. All professional traders know and understand that losses can and will and do happen. We'll be looking at some losing trades in today's webinar's video as well. Also remind you that all trade decisions are your own sole responsibility. In today's video, I'll be looking at our brand new MTPredictor version 8, which was released fully today. So if you're a current MTPredictor customer and looking to upgrade, please drop us an email, or if you're a new customer and looking to purchase the new MTPredictor version 8 standalone version, then drop us an email as well and we'll be able to help you with that. But I want to look at the 3-minute chart of the DAX today and show you how the higher time frame chart would have enhanced particularly your trade management of this VS sell setup here. But let's have a look at the earlier trade setups to see how they would unfold as well. Now remember, I like to look at multi-time frame analysis. In other words, look at the higher time frame, which if you're trading a daily chart would be a weekly. If you're trading, say, a 15-minute forex, would be an hourly. But if you're trading a 3-minute chart like this, it would be a 15-minute chart. In other words, a time frame between 3 and 5 times frames higher than you're actually trading. The MTP trend here would have been grey to start with. So if you were looking at these setups a bit earlier in the day, let's have a look at this history triangle here, do our analysis on this, and here you would have been taken in. Remember, correct position sizing varies the number of lots, contracts or shares to keep your initial risk small and under control, less than 2% of a sample $20,000 account. Yes, even though we're trading the DAX, we're doing our position sizing in dollars, and that's what this software can do, is we can actually adjust our pip or tick size. In this case here, we adjust it back into your base or your trading account currency to keep your initial risk the same. So if you were trading in euros, you see the tick size for the DAX is 12.5 euros. So there's your position sizing in euros. But if you are trading in dollars, we adjust it in the background to adjust the tick size back into dollars. So that's a neat feature of the MTPredictor software program to keep your initial risk small if you're trading different markets with different base currencies. But anyway, this was actually a losing trade. Remember, I said at the risk disclaimer that losses can and will and do happen. This would have been a losing trade or -1 loss. Let's have a look at the next one here. Again, on a black MTP trend, would have taken you in short, would have gone past the 100% initial risk level and was starting to go down nicely. So you may well have actually put your stop at break even and come out at break even. But let's take a worst case scenario and say you didn't, and it would have been stopped out here at a -1 loss. So that would have been 2 losing trades. We then come on to this VS sell setup here, and it wouldn't have been taken in on that first bar. It would have been taken in on this second red cell bar here, and this one down into its first target here would have been a +2.9. Can I call that 3? It's near enough 3R for easy maths. So you'd have had 2 losing trades, 1 profitable trade for -1, -1, +3, in other words +1R profit. You wouldn't have been taking this particular buy setup here because this first trade hadn't run its distance. And also, when we come to the higher time frame chart, large screw trend was definitely down. So let's now look at the higher time frame chart and see how it would have helped you in the management of this particular trade setup. Looking at a couple of other trade setups later in the day that are actually unfolding, you wouldn't have been taking this VS sell or this VS sell because they're against a blue MTP trend, but you may have well been long off this TS3 Holy Grail trade setup. But these I don't want to look at because I want to look at the trade management of this VS sell here. So let's have a look at the higher time frame chart. Now remember, I talk about the cyclical nature of trading. In other words, markets go in cycles and we only work when we have a nice clear and clean pattern. So let's have a look at the rally up into this previous high. Whoops, didn't mean to do that. I meant to go right mouse click, do Elliott wave intermediate. You can see we had a nice clear 5-wave sequence with the high up into the minimum wave 5 WPT. What do we know about this? Well, in MTPredictor, if the DP from the prior wave 4, which is here, is exceeded off a completed 5-wave sequence, which it was here, we then assume that the entire prior 5-wave sequence is completely retraced. In other words, we look for the market to carry on down to wipe out the prior 5-wave sequence. Normally we go back and place a DP off the start of the sequence, which is here, to give this as our initial target. Whoops, missed the bottom. And suddenly this helps you gives you a larger or further out potential support target. In this particular example, it didn't quite reach there, but if we put a low tag on the start of the Elliott wave sequence, you can see we did retrace the sequence completely with making a double bottom in these particular areas here. So that would have helped with changing your trade management strategy that we'll see in a minute or two. But this is where the larger degree analysis comes in, because it shows you a nice clear 5-wave sequence which has exceeded the DP from the prior wave 4 low. Therefore you had confidence the market was going to carry on down and wipe out at least the prior 5-wave sequence down into 931 and ideally into the DP down here. So let's now have a look at how that would have helped you in your trade management. Let's go back and put that low on. There's the low there. Actually, that might not be quite the low. I just want to go and add some more data just to check that was the low. No, it wasn't. There's the low we were looking at there. That was the start of the 5-wave sequence on the 15-minute chart. That's the low we're looking at, 931. Right. Let's have a look at then how this could have helped you in your trade management of this VS sell setup in particular. Let's place the analysis on again as we had earlier in the video. And remember, we came out at this initial target for a plus 2.9 hour profit. But because we know that the large degree trend was anticipating the market was going to go further down, what you could have done as a more experienced MTPredictor user was drag this down and put this down here as your initial target. Why? Because that's where we anticipate the 15-minute chart was going to go to. And can you see how suddenly that increased a potential 2.9 hour trade into a potential 9 hour profit? In other words, turning an initial $213 US into a potential 1100, or 9 times greater than the initial risk. So this is a good way of using your higher time frame analysis to help manage your shorter term trades. So of course, what happens if you're short and the market starts to drop down like this really sharply, goes back to basically a double bottom, and when it was in and around this double bottom in around here, can you see how you're sitting on almost 8 hour profit in around that low? So knowing that you're at a double bottom on the 15-minute chart, knowing that the prior 15-minute 5-wave sequence had been wiped out, what do? Do you hold on for a 9 hour profit, or do you look to move your stop a little bit closer and probably bank a very nice profit indeed? What I normally suggest you do is, if you're this close to a big profit but you'd got some reason why you wanted to start to protect your trade, why don't you just trail your stop at the 1 bar high? In other words, each time the bar then moves down, you put your stop 1 tick above the bar high, and that would have meant there, and then down to there, and you'd have been stopped out for a nice plus 6.8 or almost 7 hour profit. So that was a good example of how you can maximize or increase your profits on your shorter term trades by using the higher time frame analysis. In other words, using the picture on the higher time frame charts. Now remember, the picture is not clear all the time. As we teach, the picture is only clear about 50% or half the time, but when it is clear, you can use it. And this is what we like people to do with MTPredictor, and the whole idea of the software is we use it to work with the clear, clean patterns and then do your analysis on multi-time frames to be able to uncover great trade setups like this. It's not a black box system where we just look at the automatic setups and train them and use them blindly just as they are on the current chart. If you're willing to work at this and come into our training webinars when we teach customers how to do this. MTPredictor is far, far more than just a black box system and allows you to do analysis on multi-time frame charts like this and be able to uncover some great trade setups, and also with a little bit of knowledge allows you to maximize your profits on trade setups like this. So this was, I thought, was a very good example to show how you can use the additional tools within the brand new MTPredictor version 8 software to not only uncover some great trade setups, but also keep your losses small. Remember, losses can and will and do unfold, but also be able to increase your profits or maximize your profits on the good trades by not only just looking at the current time frame, but also how that fits in with your higher time frame charts and analysis as well.